I have a question here from somebody saying, why is momentum a good value trap filter? Well, if a company's business is failing, it's unlikely that investors would be buying more of the company. So, supply and demand, pushing up the share price. So that way, if you screen away for companies, I mean, let's just look at the inverse of this and see what kind of companies are coming up. Okay, these companies are not, there's a pulp company in Canada, and I think that pulp prices are at record low. Here's a few petroleum businesses. So you can look at those ones. Here's a few asset manager business, value asset managers, and you can see that they've been battling like hell to keep their assets under management. So you generally see companies that are failing, have a falling stock price, or at least are in the low part of the momentum curve, you can say. And if you screen for companies with good momentum, these companies are obviously profitable and have good prospects, because PAX, I think, recently put out a profit warning, but yeah, positive one, not a negative one. I think they say that they said that their earnings is going to be 40% higher this year, just because everybody's been buying cashless payment terminals. So that's a way to do that.